The proxy battle between Bob Iger and the Disney board and investor Nelson Peltz appears to be back on. It went on a period of hiatus back in February, but it looks like it is definitely back on with Ike Perlmutter deepening his alliance with Peltz, handing over basically his Disney stock as Peltz wants to, quote, refocus the creative engine to drive profitable growth for the Walt Disney Company. So a new report details that Ike Perlmutter and Nelson Peltz have deepened their alliance as Peltz and his Trian Fund Management group get ready for a proxy war with Bob Iger and the Walt Disney Company. Perlmutter initially aided Peltz as he attempted to gain a board seat back in January by, quote, calling Disney directors and brokering meetings between Peltz and then CEO Bob Chapek, reports the Wall Street Journal. At the time, Peltz was seeking a board seat for himself using 9.4 million shares valued at $900 million as leverage. He believed that, quote, Disney is one of the most advantaged consumer entertainment companies in the world with unrivaled global scale, irreplaceable brands, and opportunities to monetize its intellectual property better than its peers by leveraging the Disney flywheel, networks, theme parks, consumer products, etc. However, he also believed, quote, that Disney's recent performance reflects the hard truth that it is a company in crisis with many challenges weighing on investor sentiment. To that end, he identified multiple areas where the company was struggling, including corporate governance, strategy, and operations, and capital allocation. In order to fix this, Peltz and Trian indicated they would help the company develop an effective succession plan, align compensation with performance, improve DTC, which is direct-to-consumer operating margins, eliminate redundant and or excessive costs, refocus the creative engine to drive profitable growth, enhance accountability on capital allocation, and reinstate the dividend by fiscal year 2025. Peltz would end his proxy battle for the board seat in February, with Trian announcing in a press release, "We congratulate Disney and Bob Iger on their recently announced operating initiatives, which are a win for all shareholders and broadly align with our thinking. We are pleased with the role that Trian was able to play in helping to focus the board to take decisive actions, which we believe will lead to better financial results. We were also pleased to see the company's pledge to restore the dividend. Accordingly, we are withdrawing our nomination of Nelson Peltz as director to allow the board and Disney's leadership team to focus on creating long-term shareholder value without the distraction of a proxy contest. Now it's about execution and ensuring best-in-class corporate governance going forward. We will be watching and rooting for the company's success." Clearly, that execution has not been enacted because we have a report from the Wall Street Journal that Nelson Peltz is ready to get back at the proxy battle. But before we get to that, let's get to Ike Perlmutter. So, however, since the proxy battle ended, Perlmutter was let go from his position at Marvel Entertainment, with the executive telling the Wall Street Journal he was fired because he wanted to keep costs down. He said, "I have no doubt that my termination was based on fundamental differences in business between my thinking and Disney leadership because I care about return on investment." Specifically, Perlmutter noted his focus was not on how big the box office gross is and was not on how big box office grosses are, and claimed only people in Hollywood focus on box office gross. He said, "All they talk about is box office, box office. I care about the bottom line. I don't care how big the box office is. Only people in Hollywood talk about box office." He also disputed claims he was let go due to redundancies and downsizing at the company. He said it was merely a convenient excuse to get rid of a longtime executive who dared to challenge the company's way of doing business. Not only did Perlmutter allege he was let go due to his desire to keep costs low, but the Walt Disney Company has rolled out a string of theatrical losses, likely losing the company tens of millions of dollars, if not more. I think there was a new report that says that they've lost over $30 million on their streaming as well as theatrical costs just this year or this quarter. It also does not appear to be growing its flagship streaming service, Disney Plus, and CEO Bob Iger has also admitted the company created a number of programs for the streaming service that were not driving subscriptions, aka not bringing in revenue, not generating profits. The company's stock price has also dipped below $80. So towards the beginning of the month, we had a CNBC report claiming that Peltz and Trian were gearing up for another proxy battle and had increased his shares in the Walt Disney Company to around 30 million. Not only did the report detail Peltz had increased his shares, but it revealed Trian was aiming for not just one board seat, but they now want multiple board seats. So we just had a report in the Wall Street Journal earlier today revealing that Peltz's increase in Disney shares is due to an alliance with Perlmutter. Laurent Thomas and Robbie Whelan at the Wall Street Journal detail, Perlmutter said he has entrusted his stake in Disney to Peltz's Trian Fund Management as it prepares to press the company for multiple board seats. Trian's holding in the company totals about 33 million shares, including stock that the investment firm controls under an arrangement that gives Peltz firm sole voting power over Perlmutter's shares, according to people familiar with the matter. Perlmutter has not only given Peltz and Trian control of his shares, but the report notes he plans to urge the board to, quote, immediately welcome one or more Trian board candidates. Perlmutter told the outlet, "While I was a Disney employee, I was not comfortable publicly stating my views on the company and its performance. As someone with a large economic interest in Disney's success, I can no longer watch the business underachieve its great potential." As for Perlmutter potentially getting a board seat, the report claims Trian isn't seeking to add Perlmutter, who was chairman of Marvel Entertainment until March, to Disney's board, nor is the firm asking Disney to rehire him, the people said. But clearly, there is a proxy battle brewing, and it looks like Nelson Peltz and Ike Perlmutter mean business, and they want to effectively change the way the Walt Disney Company does business, and it does not look like they are going to be told no this time around, as Peltz has now tripled the number of shares that he wields in an upcoming battle with the Disney board. And I would wager that he's probably going to win if he's already tripled his shares. I would not be surprised if he continues to increase those shares in order to make change at the Walt Disney Company. And again, this shouldn't really be a surprise that this is happening. The Walt Disney Company has put themselves in this position with financial loss after financial loss at the box office, an absolutely disaster rollout for their Disney Plus streaming service, which continues to lose money hand over fist. They've just made mistakes after mistake after mistake, and it doesn't look like anything is getting any better. And Nelson Peltz is ready to correct the ship and make good on the investment that he has in the Walt Disney Company. And this is a man who has a track record of doing such things, most recently with P&G and prominently a couple years ago with Heinz. So look for more on this as we continue to cover the financial drama with the Walt Disney Company.
Subscribe for more.